It's Market Day Report. Welcome to another trading day. Okay, we're working our way towards a report in a week. This is the quarterly grain stocks report. We'll get that next Tuesday, 12 p.m. Eastern Time. Right now, we're looking at the corn market, and we're in higher territory, trying to break a 4-day losing streak, as the December contract is now a half penny off the day's high, which is 424. Still pretty tight range in there, only 5 1/4 cents on the trade range, but up 1 3/4 cents on the corn market. Here's a note important to remember, I think, because USDA reported another flash sell this morning, 4.84 million bushels to Mexico, and the majority of that will be this current marketing year, which runs through the end of August, and then a small amount for the next marketing year. And if you add today with the previous 1, 2, 3 days, that's 30 million bushels sold in 4 days alone, as far as reported by USDA. What about the beans? Well, beans in the red, down a penny at 10.10 a bushel. Wheat market, well, we're 6 1/2 higher on the old crop December, 5.17 1/4. July, 5 1/4 higher at 5.57 1/2. Hard red, old crop, 3 1/2 higher, 5.05 3/4. New crop up 2 at 5.53 1/2. And the cotton market is 30 points higher at 66.52. Our guest today is Chris Swift. Chris is with Swift Trading here in Nashville. And Chris, we start looking at where we've been in that corn market. And again, we're holding those lower prices despite great export demand.
We have had some export demand out there, but we know the crop is really big. And I know in our next segment, we're going to talk a little bit about incentive, but something that this tariff issue has done is incentivize China to increase their production in South America. They have improved the roads. They have made tremendous investments now, and that is not anything new. China has always been investing in South America, but since the tariff issue has come about, they have increased that considerably. So we have to pay close attention to our big trade ally that right now the tariffs are probably a fairly good size issue of keeping us from having stellar demand in both corn and beans. And a lot of that corn demand is just going south to Mexico there. And of course, they have become a bigger trading partner with us, but that loss of Chinese demand is going to be huge down the road.
All right, so especially when we're talking beans, we talk China. There's a group who believe that ship has sailed, no pun intended, and we're not getting China back. There is another group, however, that says, no, we can still go back and get China. Where are you at as far as beans and China? Can we return to where we were 10 years ago?
Well, I think a lot of that has to do with weather. We can always have some kind of weather catastrophes either in the North or South Americas here that could produce unbelievable rallies in the market. So I think from a demand standpoint, we need China because we are overproducing. We are drowning in grain. 16 billion bushels of corn this year. And although our soybean crop is going to be short, it won't be in South America.
Speaking of short crops,
I know
cattle, you knew exactly where I was going. So we'll take a break. We'll come back and pick this conversation up. This is going to be good. I hope you're sticking around for more Market Day Report. Livestock futures. Let's start with the hog market. I mean, it is the morning, right? And everybody enjoys some bacon. By the way, we'll be getting a pork update a little later. That comes tomorrow. But right now, how about hogs? Just hogs. Dollar higher, $99.80 on the October. Keep an eye on this one. Could we hit $100 today on October hogs? We'll be watching that. Feeders. Yesterday, we hit locked limit on November, January, and March, so expanded limits today. We're higher across the board with the feeders. And then we go to live cattle futures, and we're mixed in the trade. Front 3 months lower, and April and June moving higher. Our guest in studio is Chris Swift. Chris is with Swift Trading. All right, earlier today, we had Sid Miller, Commissioner of Texas Ag, on, and the question was, any ideas on what could be coming from the administration? They're suggesting maybe we need to start rebuilding the herd.
Correct.
In other words, incentives. What thoughts do you have?
Well, it's interesting because generally a high price creates that incentive, and here we are talking about subsidizing a producer with all-time high prices now. If that does become the case, then what we do is move ourselves back to a 2013 time frame in which both cows and heifers were held back, making for an extremely short supply, ran the market $60, $70 in that time frame until 2014, and then it was found out, hey, they've been breeding not only heifers, but cows too. We're going to grow the herd exponentially. By 2014, the market had started down into 15. Then it stopped because those cows weren't ready yet. It was just the recognition that the breeding had increased. But then by the time 2015 came, the cows were actually here and the market dropped off $100+. So now we look at, is this going to be the same situation? If I'm going to be paid to hold back that heifer, why not hold back the cow too? Because I'm not losing the revenue, and we could actually exponentially increase the cow herd within a year's time.
Okay, so the next question, I get this from time to time. When will we get our cow numbers back? And my question is, to what level?
Yeah.
Are you talking to the level we had 3 years ago, 5 years ago, 15 years ago, 30 years ago? What's the ideal? Is there any idea what a good ideal number would be for a national herd?
Probably not, because cattle have always been a boom and bust type industry on here. And the way that I look at it is from 2020 to 2025, we have increased production and processing capacity unbelievable. The number of yards under 1,000 head that aren't reported, farmer feeders, they are scattered all throughout the north out there, and they are a big production. The dairy, we've already created massive incentives for the dairy industry, and they have come forth. They have really been able to increase the production. But unfortunately, what it looks like, since we're not going to increase cattle production even within a year, if we started today, it's still 16, 18 months out. We're unfortunately going to have to reduce some of that production and processing capacity.
Told you you'd want to be here for this. It's Chris Swift, Swift Trading. What a great explanation. Again, we don't know if the government will be coming forth with an incentive plan, but it is some things to keep in mind.
Absolutely. You guys are on top of it. We appreciate it.